Hey, how you doing, Map here? Map Investments. Bringing you a video here while I do my little daily morning walk on mid-morning. Hope you all had a good Friday. Uh, Happy Easter. Enjoy with your families. I'll talk about a little bit about what's going on in the market and trends while I do my little walk. Trying to do more videos and get some of the good information out there that I see in the market and trends. Being that I look at this all day and I've studied it for years. Beautiful day today here. It's about 85 right now. Kiddo has a practice, not practice, a little picnic at 1 p.m. with her soccer buddies. If I take my face off the camera, it's because I'm walking, so I don't want to run into a pole. So the market's actually been doing some YouTube shorts to diversify the channel, and thank you for those that have subscribed. That's actually working. Those YouTube shorts, people don't really want to watch long videos these days. But I think my videos, that I can keep them to like 15, 20 minutes on the trading and the trends in the market, it will be beneficial to those that want to learn how to trade as a side hustle in the options and future markets. In regards to the market, right now we have the Federal Reserve trying to tame inflation, which is a tough scenario for them because they're pretty much trapped. I mean, the country has a whole lot of debt, and our economy, 70% of it plus is consumer materialism, just consuming everything. We don't really. I think savings are at pretty much 08, 07 crisis levels, if I'm not mistaken. They've gone down after the stimuluses that they handed out. Everybody's running out of dough. So they have to fight inflation. And in the 80s, Paul Volcker had to raise interest rates up to 20% to bring in inflation. Can you imagine what 20% would do in this current environment? We're at 5. Inflation's probably about, based on the government reading, I want to say it was 7, more or less, just using round numbers. But it really is more than that. We're just going by government statistics. I want to say inflation is probably easy, 15%. Just go to your local grocery store. But look up the word hedonics, and that's what the government uses. So what hedonics is basically like a substitution. So like, let's say if beef is really expensive, they say, okay, well, beef is really expensive, folks are gonna buy chicken. Or if the refrigerator is more money but it's more cost efficient to run it as electricity, that's another kind of skew that they use in the inflation gauge. But your regular stuff, when you go to the grocery store, what you need to eat, it's just crazy. You walk out with a couple bags and it's like $150. So it's nuts. It really is. They just sold this house right here. This house right here. They just sold this house. Right there. They're fixing the windows. 400. They sold that house for 400, and if my mind is correct, 460,000. 3-1, full of termites. Shack. Incredible. Crazy. So they gotta raise interest rates to a real high level to bring in these dollars and stop basically what they have to do is stop the behavior. But there's really no incentive to save. Really isn't, not right now. And then you have the yield curve that is completely inverted. You have the front of the curve, so the bond market. So basically, just to chime in on this, because the bond market is the debt market. The debt market is bigger than the stock market. You got the currency market, which is the FX market for you FX traders, Forex traders, which you can do in, let me switch hands, getting tired. You can do in futures or future options. You can also trade currencies. But the Forex market is the biggest market. And then you got the debt market, which is the bond market, which the government issues so they can fund their, their social programs or to fix the roads or whatever they want to do for the country. The defense, Social Security. You get what I'm saying? So they sell these bonds and investors buy bonds. But the thing is, the bonds have to make sense as an investment if inflation's running at 7% and you're buying a bond for 5%, you're still losing 2%. And that's the way you gotta look at it. And basically a bond is an IOU. I'm gonna pay you in a later date in dollars that may be worth less. So it's a catch-22. So the front end of the yield curve, so you have 3 months, I don't know exactly how it is, but I think I want to say 3 months, 6 months, 2 year, 5 year, 10 year, and 30 year. The front end of the yield curve, those interest rates were like over 4. Some of them almost got, like the 2 year, I think it almost got to 5, or they were at 5. So everybody started buying these investments. And when you buy these investments, when you buy bonds, what happens to interest rates is they go down. When you sell bonds, it's inverse. It's an inverse correlated product. When you sell bonds, interest rates go up. So everybody's buying the front end of the yield curve and driving down the rates. And people, that's a big recession risk. Now the back end of the yield curve, the 10 year and the 30 year, those rates are really low. And that's why the yield curve is inverted. Because the front end is higher, and then as it goes down, the back end, the interest rates go lower, it's inverted. A regular yield curve slope should be like this. Front end are lower, and the higher, and the 30 year and the 10 year are higher, because you're tying up your money for more time. And then you got a flat yield curve when everything's pretty much the same. And I expect over time, as more people buy the front end of the yield curve to get yield, that interest rates will keep going down in the front end. And I think eventually the long end of the yield curve will explode higher as people sell those bonds. But that trade hasn't worked, but eventually will work. It will. The dollar has been weak, and I think the dollar will continue to decline. We have foreign countries like China working on pacts with Brazil and stuff like that. And it's happening all over the world. Basically the BRIC nations, emerging markets, BRIC nations. They're trying to transact in non-dollars. And that's going to hurt the dollars, because what happens is when they start dropping dollars, all those dollars are going to come back to the United States. And you're going to have so many dollars running around here chasing so few goods, because the whole honest truth is we don't produce much. Everything's manufactured in China, which a lot of people are trying to get away from that. So that's a catch-22 that the Fed's in and the country's in. So you got to protect yourself. How do you protect yourself? I've been doing some shorts on that. You want to be in energy. You want to be in agricultural place. When I say ag, corn, wheat, soybeans, John Deere, fertilizer plays like Mosaic, just to name a few. There's a lot of them. You got Nutrient. There's several, and I might chime in other videos on them. And precious metals, gold, silver. You can even go with copper. Copper's a cheap metal, which it is used big time in the EV market. Big time. And it's an industrial metal, but man, it hasn't really gone under 4. It's been I've been watching it for a while. It's been around 4. And I think with time it's just gonna go higher. Maybe buy yourself some copper rounds. And maybe silver. I think silver, the poor man's gold, is very undervalued. The last crash in 08, 09, silver hit 50. And we're basically 25 on the paper markets. But if you go into like AppMex and you look at their prices, they're over 40. Can't get a coin for less than 40 easy. Gold is the creme of the creme. Can't go wrong with gold. Central banks are buying gold left and right. Countries are stockpiling on gold. Make sure you get your gold where you can hold it. Bitcoin crypto market, you can put some of your assets in there, 3 to 5% if you want, if you feel comfortable with that. I wouldn't touch any of these crypto exchanges with a 10-foot pole after what Sam the Man did at FTX and Genesis and all these people going. You can wake up one day, you can't even access your account. So I'd rather go with Tasty Trades. They actually have some cryptos in there. I don't think they're going anywhere. They're a pretty good broker. And they got bought out for like $1 billion from some company out of Europe. Or you can go to TD Ameritrade and you can buy BITO, or ETHE for Ethereum. And those are my two there. If you want to mess with Coinbase, you can go. Well, I guess they're the biggest one out there. But even then, they've had times that you can't even get into their website. In regards to the stock market, the S&P 500, which is the biggest 500 companies in the United States, pretty much overlaps. Like, big percentage of the NASDAQ, the Qs, is correlated to that product. And the Dow Jones, there's a lot of stocks on the Dow Jones, like Apple and stuff, that are also in the S&P 500. So when you better weight a portfolio to check what your exposure is, you do it against S&P 500, which is the standard out there. It's pretty range bound from 3,800 to about 4,200, and we're approaching the top end of the range there. Now what the Fed's doing has been working in regards to they really want to see unemployment go higher, which I don't know, doesn't make sense to me. The JOLTS report had less people in the workforce. I think it was under 10 million. I think it was 9 million. And jobless claims went up. And we're seeing more and more every day, especially in the technology sector, layoffs coming and in pretty big numbers. So you got to do your side hustles. Subscribe to the channel. I talk about trading strategies on here, and you really don't need much. You can start with a couple thousand, and it's a better return on your investment and less risk. But you got to do those spreads and make them sure they're defined, where it doesn't hurt you and it keeps you engaged in the market. You want to pick up some precious metals. Real estate is pretty much an equivalent of rents. And right now we have an affordability crisis in the United States, and evictions are on the rise, and it's just a mess. It's just a mess. This house, I don't know if you can see it. Let me see if I can see it. This house right here, this one right here, I don't know if you can see it. Now right there, that one sold a couple years ago. They were asking $320, and right now it's I think that was like maybe 3 or 4 years ago, $320. Had a hole in the roof and everything. Sold for $320. House right now is probably worth who knows, $650,000, $700,000 easy. What else? Beautiful day. So real estate is really hard to get into. Interest rates, they've come down here recently. So it's tough. Still at 6%, it's cheaper to rent, obviously, but the rents are through the roof. At least where I live in Miami, it's just crazy. Down here, it's crazy. The appreciation of the homes, and the rents, it's just mind-boggling. It really is. So, yeah, real estate is an equivalent of rents, and it just doesn't make sense to me right now. So, I'm not even looking at that kind of asset at this moment. No interest on my end. I got an apartment and I got my house. That's pretty much good for me right now. If you want to get into real estate and you think that's the place to be, you can also do it through REITs if you want to. Those things have been destroyed with the banking crisis, with the Silicon Valley debacle. And we probably have more banks to fail. And the reason the banks failed is because of the yield curve. So the Fed is basically destroying everybody by raising interest rates. And when Silicon Valley failed, that whole week and that whole crisis, the Fed probably printed to bail out, because that's what they do. They bail out these banks that speculate. But when you and me make a bad trade, we don't get bailed out, unfortunately. That's crony capitalism. And that's been going on for years. The big boys get bailed out, and the average Joe, well, you know what, you're screwed. So, yeah, they printed about $500 billion. Only about $500 billion. Their balance sheet should blow through 10 trillion since COVID. 10 trillion only. They're trapped. There's no way. I think hyperinflation is pretty much a sure thing here in the near future. Eventually we'll have, I guess, a digital dollar. Who knows? So we probably will see more banks go down, and we shall see what happens with interest rates. The market is playing chicken with the Fed, and they don't believe them. Interest rates are lower in the market compared to what the Fed says they're going to do. So we'll see. That's only going to make precious metals and inflation roar its ugly head. And the ultimate hedge is, the metals. Maybe some cryptos if you want, 3-5%. Stocks, tech has had a bounce, but I don't think that's the place you want to be. People are going there because they're cash rich, like Microsoft, Apple. They have big balance sheets. Sure, I guess people are looking at them as defensive companies. I don't think they're going to go anywhere, obviously. Those are great companies, but they're overvalued. I think there'll be other sectors that will have pricing power and do better for you. I really don't hold many stocks at the moment, just options at the most part. And then the other thing that would be good to protect you is having some foreign exposure, maybe going overseas. I have FKIDX, Fidelity Overseas Fund, in the 401k. Every check I get, I put into that. And really don't have much right now in the United States. Maybe only stocks that I got put some Schwab, which owns TD. It's really at low levels. I don't know if it will perk up fast. I don't know. They have some exposure supposedly, and see how long I stay in that, and maybe Tyson food, because everybody needs proteins, and lean hogs have gone down, so maybe they get some pricing power on their pork. Now beef is out of hand, and cattle's probably the most fundamental market out there right now because of supply and demand. The grains, I have to do more research on the grains. They've pulled back and they've been pretty sideways. I have to do more research on what's going on in Argentina and stuff like that, and read some more reports about the ag space. I know the fertilizer stocks have been hit, and fertilizer stocks should have pricing power because a lot of natural gas goes into their companies, and natural gas, I did a short, is back to lows, almost under 2, which is crazy. Definitely have, if you want to be anywhere in the stock market, I think you definitely have to be in the energy sector. Big fan of XOP and XLE and Atom on dips. We did have an explosion and we got oil back over 80 because OPEC cut production. And that's a catch-22 because the administration was trying to refill their SPR. SPR, Strategic Petroleum Reserve, is at 40-year lows. And they wanted to fill it up again, but guess what? OPEC cut. So oil's back up to 80. I think oil's heading much, much higher. I mean, much higher. I think last time around we hit 130. And in the 08 crisis, I think we hit 140, 150. I think we're going to go back up there. And it's going to be tough because energy is the ultimate inflation component. Because, fuel, diesel goes into all these trucks that move all these goods, and you have to ship them. And if shipping's high, you got to put on top of the price of the goods. So, you want to be in the energy sector, ag, space, commodities. Not a fan of real estate. Look at that lizard. Look at that lizard. Look at that sucker. Man, I never seen lizards like that when I was growing up here. They've changed color, size. It's crazy. They look like dinosaurs. What else? What else can I chime in? Used cars. I'll probably do my whole kind of diversified. You got to be in this in this economy. You got to do it all: stocks, options, futures. I did a YouTube short there on alternative investments. Just a little bit dabbling there. I bought a comic book and it's up 160%. That's pretty cool, You also want to, besides that, probably in my other videos going forward, I think it's because besides housing being a big investment, cars are a pretty big investment. Cars have been out of hand. Everybody needs cars, to get to work and back and forth. So that's what I do as my main living. I sell used cars, and been doing it for 13 years. So I'll probably do more videos on different cars. I have access to new cars, maybe do reviews on new cars to diversify the channel and the pricing on the used cars, and also drive a lot of electric vehicles. So maybe, as that becomes the future, I don't know if it's going to work or not, but that's what it seems that we're going. Talk more about the electric vehicles and the prices of cars, etc. I think that'll be good. I think that would help people out there. Anyways, this video's been 22 minutes. I'll probably continue to do the YouTube shorts because it's added to the subscribers. I'm getting a nice workout here. And enjoy your Saturday. Probably do a video tomorrow, probably in the night when the futures open. Maybe do a quick future opening on the market. See how we're opening up the week after Easter. It's crazy. We've already gone three months into the year. I'll probably do another video, when I do about the futures opening up. I'll touch on how the futures have done year to date. I think the leading future is orange juice, if I'm not mistaken. I like OJ. Good stuff for you. Good vitamin C. Anyways, like, subscribe. If you want to learn more, join the channel. Chime in if you want to see some specific videos on something. And have a great weekend. I'll see you in the next video. Bye-bye.